So you have a chunk of money saved up, you don't want to buy a house because you don't quite have enough, but you also want to let this money work for you so that you can make more money on that money. This is a step-by-step guide in this video of exactly everything that you need to do, and it's also how I turned a portfolio from $0 into over $770,000 in 4 years. I'm going to explain everything that you need to know, all the things that you don't need to do, and how I did this as just a normal guy. So let's face it, the investing world is complicated. You can invest in stocks, bonds, crypto, real estate, you could buy a business, you could start a business. It's hard for the average Joe to know what to do and where to start. That's the point of this video right here. So this video is the ultimate guide to investing. I'm gonna break it down into 4 categories, which is gonna break down everything that you need to know step by step for anyone to understand. The first step is the basics. You're gonna learn about what is investing, how does it work, and what are you even investing in. The second step is gonna be why do I invest and how do I invest. The next part is gonna cover some of the common fears that most people have and some common questions that most people have. And then the last part is gonna be my fast lane to wealth, how I converted a portfolio of $0 4 years ago into over $700,000 right now. So the goal of investing is number 1, you want to have returns that at least beat the rate of inflation. If you do not beat the rate of inflation, your money is actually going down in value, so you have less purchasing power. The price of gasoline 20 years ago versus right now is obviously a lot lower than it is right now. So there's multiple types of investments, like I said. My 2 favorite ones are going to be stocks and real estate. Real estate is good because it appreciates usually over time if you buy in a good area. You get depreciation, which helps you out on taxes, and then you get the cash flow on a monthly basis. We're not going to go much into real estate in this video. The main purpose of this video is to go into how the stock market works and how you can make money that way, because it's easy and everyone can do it right now. So typically speaking, stocks go up in value in relation to the earnings that the company makes. So if a company is more profitable every year, typically speaking, the stock price follows that. So if the earnings of the company goes up by 10%, typically the stock will go up by 10% also. So typically when you say you're gonna buy a stock, what are you actually buying? You could buy a stock in Apple company, Tesla, Amazon, Nvidia, whatever public company that is out there, you can buy stock in right now. There's also a different type of investing where you could buy into ETFs or index funds. ETFs, which are exchange traded funds, it's a collection of stocks where you make one purchase and you buy into a giant basket of stocks. One of the most common baskets of stocks that you could buy into is the S&P 500. So the S&P 500 is the 500 largest companies in America and typically corresponds to about 80% of the economic output of America. So if you believe in America for the long haul, you believe in the American tailwind, the S&P 500 is usually a good bet. This bet is also backed by one of the most famous investors of all time, Warren Buffett. Warren Buffett did state that his money, when he dies, whatever is not donated, he is going to put all of it into the S&P 500. He is worth over $200 billion. So the fact that someone worth $200 billion is going to put all that money into the S&P 500 once he dies, that says something about it. So what does it mean when you buy a share? So investing in stocks means that you actually buy a piece of the company. You are an actual owner, just usually on a very small scale because there's a ton of shares. So the next question people say is, well, how do I make money with stocks? How do I actually get the money? So if you buy Apple stock for $100 a share and it goes up to $150 a share, you could sell your shares for $150 a share and you essentially made $50 per share. That is one way that you make money owning stocks. The other way that you make money owning stocks is with dividends. It's extra money that they typically give back to the shareholders because they think they can't really do anything with the money in the company to make the company bigger or grow anymore. So typically companies that are more established, that aren't growing as fast, pay a dividend to the shareholders. It's also super important, check your portfolio right now, all your dividends need to be reinvested. What that means is when you get your quarterly dividends, you don't take that money and it sits in cash in your account. That money gets credited to your account in cash and then it automatically goes and buys shares with whatever amount of money that was. So this is how you get that exponential growth curve in your portfolio by reinvesting your dividends. Very, very important you guys do that. The size of your dividend payment is directly related to how many shares that you own. Typically, dividends are paid on a quarterly basis. So if you own one share and they say that you are going to get a quarterly dividend of $2, you'll earn $2 per share per quarter. But picking individual stocks can be risky. Warren Buffett, who is one of the best investors of all time, who has a net worth of over $200 billion, recommends index fund investing such as the S&P 500. So index funds diversify your investment across many different companies, and it reduces your risk because you have more stable returns. So if a couple of the companies do bad but a couple do good, they'll balance out and your portfolio won't be super jagged like this. It'll be more of like a steady incline. So a common concern is the potential that you could lose your money if the market declines. For example, investing before the 2008 financial crisis would have led to temporary losses. However, markets typically recover, leading to long-term capital gains. There's always going to be a doomsday news reporter out there saying the stock market's going to crash, it's never going to recover. But since America was founded, that has never happened. We've been through world wars, we've been through pandemics, we've been through so many different bad things, and America has always gotten through it. So I believe that the best strategy for most people is to dollar cost average into the S&P 500. Dollar cost averaging, which is also referred to as DCAing, is buying additional shares on a regular basis. So you buy when the market is going up, you buy when the market is going down, but over time, the average price that you paid for all the shares averages out to be a fair price. So you don't have to worry about if you're buying at the top of the market or the bottom of the market. You just buy at all times. So maybe you overpaid a little bit and then you underpaid a little bit. Your average price will average out to a fair price. This makes it a brainless act of investing, and you never have to try to time the market. So there's a famous saying about the market that time in the market is way more important than timing the market. There's so many people out there that try to time the perfect time to buy the market. They say, this is the bottom, I'm gonna buy, or this is the top, I'm gonna sell. What matters the most is the time that you have in the market, meaning you invest today. You don't wait 5 years for maybe a little dip to happen. You invest now and you dollar cost average in every time you get a paycheck or you have some extra money. Often when there's a stock market downturn, it's followed by a massive boom period. So over the last 50 years, the S&P 500 has returned over 10% annually. This means that you will double your money every 7.2 years due to compound interest. The likelihood that all 500 companies in the S&P 500 go to zero is very, very low. We would need something extreme to happen, such as the collapse of all of human civilization, for that to happen. And if that happens, I think that we have worse things to worry about than our money. So starting to invest does not require a large sum of money. Platforms like Charles Schwab and Robinhood allow a starting amount of just $1, and you can actually buy fractional shares now. So if the share price of something is $100, you could actually buy 1% of one share for $1. So you could get started with $1. There's no excuse to not start right now. Another key to investing in the S&P 500 and just investing in general is you want to do it in a way that you don't get charged high fees. Fees are kind of like a hidden way that whoever is running that index fund or whoever is your financial advisor, they're taking a percent of your profits. But even if they say, oh, I'm going to take 1% of your profits, it's really a lot more. I mean, in a typical portfolio, that equals hundreds of thousands of dollars when you're 70 years old. It might not seem like that, but run some calculators on it. 1% of $1 million portfolio for 20 years is an extreme amount of money. So the Vanguard VOO is a good way to get exposure to the S&P 500. Vanguard basically just tries to mirror what the S&P 500 does because you can't actually buy into the S&P 500 index. So for example, the expense ratio on the VOO Vanguard is 0.03 of 1%. So what that means is for every $10,000 that you have invested, $3 a year is fees. So it's pretty low. So the final part of this video is how did I become a millionaire before age 30? I have a job where I make about $100,000 a year at my day job, but I live below my means and I have been for a while. So starting about 6 years ago, I started putting about $50,000 into the stock market every year. Now the stock market has been doing great in the last 5, 6, 7 years, so I've been doing great. And also to magnify my gains, I sell put options. I'm not really going to go deep into selling put options in this video. So not only do I do options trading that makes me a lot more money to magnify my returns, but I always look for ways to make more money in my life, whether that be a side hustle, a business that I could start, any other way that I can make a little bit of money on the side or even save a little bit of money. That extra money then gets put into the stock market to make me more money. Also, like I said, I have some rental properties. So if I have a rental property that is worth $400,000, but I buy it for $300,000, I have instant equity of $100,000, and then I'm probably gonna make monthly cash flow on it because I have a tenant in that, and then I can depreciate it, and then the loan pay down. So a combination of a lot of things is how you really make money in the real world. So if you made it this far in the video, like, subscribe, and I'll see you guys later.